Have we finally hit the peak of inventory for the summer? We've had 16 weeks of rising inventory up from the historic lows of the beginning of the year. Are we finally ever going to see the remaining homes in the mortgage forbearance process come to market? That's what we're looking at this week in the Altos Research Market Update. Each week, Altos Research tracks every home for sale in the country, all the pricing, supply and demand, all the changes in that data, and we make it available to you so that you can see it here before the traditional data channels. Let's see what the data says for the week of August 30, 2021. The median home price of a single family home in the US this week is $389,000. That's basically unchanged from last week, down just a tiny fraction. It's the end of summer now, and prices are generally stable from here until November. You can see each year's cycle in the dark red line here, they're the stretches where the fall transactions happen and prices stay supported. Home prices are up 10% year over year. Remember, the annual comparisons to 2020 they're gonna be weird because so much of the normal fall winter seasonality was not in last year's market. It was just hot all winter long. And so in the fall of 2020, when prices would normally be declining, they stayed elevated with that intense demand that we had the American consumer last year. So even in this crazy market this year, the annual comparison is only up 10%. You might hear other price numbers still quoting as high as like 20% annual gains, but those are really backward looking at transactions from properties that were on the market months ago. So for example, tomorrow, the Case Shiller index for July will be released, even as we're already in September. So expect the other price appreciation reports that you see in the headlines to be very high, from readings earlier in the year, and then gradually cooling to catch up with the Altos number over the next few months. Looking further into the future, if you pay attention to these videos, you'll know that the price of the new listings, that's the lighter colored line here, is even more advanced. So when we look at the cohort of homes that hit the market in a given week, we can see the wisdom of all the sellers and all the listing agents baked into the pricing. And the median price of new listings stayed flat another week at $350,000. That's showing us that buyers are still very, very motivated. Speaking of those videos, next week, September 9th, Thursday, 10 a.m. Pacific, is our full hour-long webinar where we dive into all the details, all the leading indicators, and where we really have time to explore what we can already see for the fall and winter housing market. Registrations for that webinar are open now. There's a link in the description below here. Spots fill up quickly on those. We limit it to 500 people. So if you are interested in the data, communicating it with your clients, understanding what home buyers and sellers need to know right now, click the link in the description below to register. That's next Thursday, September 9th at 10 a.m. Pacific. But the really big news this week is that available inventory of unsold single-family homes in the US stayed flat at 431,000 homes. The news is that inventory did not increase, except for the 4th of July week, that this is the first week in 16 weeks that inventory didn't climb. It's actually a signal that inventory may be reset into this new normal range, peaking around 500,000 and starting the year under 300,000, at least until rates climb from the historic lows we're still at. This week and next, we'll have some Labor Day holiday weekend, so there will be generally fewer new listings that come to market over that. So total inventory should continue to be flat or down in the next couple of weeks as the stuff on the market gets bought. Last year, we're still in the craziness, 591,000 homes on the market, but shrinking by a couple percent each week as Americans bought everything in sight. So you can see how we might emerge from this year in a new low cycle of available inventory. You can imagine how we might stay in this cycle until some big macro change happens, like rates move or some kind of economic shock that shifts us into, forces people to sell, for example. One thing we've been paying attention to lately is this phenomenon of coming soon properties. Coming soon is a marketing technique that realtors in some parts of the country, especially like Southern California, use to get attention before the house is actually listed for sale. Can you line up bidders and get that immediate sale? So the question here is, if a property is coming soon, is it actually for sale yet? It's going to be for sale, but it's not yet. Is it active inventory? So we process this, and every local market processes it differently. We try to standardize so that we have, we say, no, those are not yet active properties. And we try to control for marketing techniques like that throughout the Altos data. And there's a fair number of coming soon impacting the inventory numbers right now. And that's actually the other way to look and notice that demand is not really abating anywhere. This is our immediate sales tracker. These are the homes that got listed and took offers in just hours or days and went into contract essentially immediately. Maybe they were pre-marketed as coming soon. At any rate, we had 24,000 immediate sales again this week. It shows that while that maybe there are fewer people in each bidding war, there's still plenty of buyers waiting for any opening at all to snap up the new listing. So we can see, especially actually that immediate sales were strong in places like Miami and Phoenix, which may be the first of the snowbirds buying now in preparation for their winter months. Still, the point is still a very big chunk of the new listings are getting snapped up essentially immediately. And buyers really haven't backed off in that sense. Let's wrap today with this interesting view of the supply side of the housing market. If we plot the new listings volume over the last several years, we can see really when the immediate sales kicked in volume across the country. In each weekly plot here, you can see a dip at Independence Day, at Labor Day, then again at Thanksgiving Day and Christmas, New Year's week. When you take out the immediate sales, and we've been in a hot market for several years, so there's always some immediate sales happening. But you can really see the available inventory never peaked in 2020, and after a few weeks of that pandemic lockdown. And then you can see in the beginning of 2021 how we were just dominated by the immediate sales. Now we're in a much more normal, seasonal normal level in new listings. 73,000 of those came to market and weren't immediately sold this week. Again, you could expect this number to resume old seasonal patterns only when rates climb to a place that begins to affect affordability. Importantly, this really shows us that there is no wave of distressed sellers anywhere in the market yet, really not anywhere in the country that we can find. There are still 2 million people in the forbearance program, but overall mortgage delinquencies are actually declining. Americans are in a better position on their finances than they've been in decades. And we hear the housing bears every day, but we just don't yet see it in the data. Of course, when it changes, you'll see it here first. That's all the time we have for today. Inventories stopped climbing for the first time in 4 months. New listings volume is strong, but there's no surge. All the leading indicators of pricing are holding up well into the fall. Don't forget, next week, Thursday, September 9th at 10 a.m. Pacific is our hour-long webinar where we look at all the leading indicators, all the supply and demand factors, and then dive into the local markets too. The link to register for that webinar is in the description below. If you're a real estate professional and you have clients that need to understand what's going on right now, you should definitely join us to be ready for the fall. Register for that in the webinar below. Okay, that's all we have time for now. See you next week.